Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. Elon Musk tweets the bird is freed, signaling his takeover of Twitter. Sources tell CNBC Twitter CEO Parag Agrawal, CFO Ned Segal, and policy chief Vijay Gadde have been fired with severance costs totaling up to $200 million. Musk is likely to take charge as the interim CEO. Apple's global iPhone sales fall short even as revenue from India hits a record high. Amazon shares plunge after sluggish holiday sales forecast. The big tech rout continues on Wall Street with $800 billion in market cap being wiped out just this week. Maruti Suzuki cruises in the second quarter. Margins come in at a 7-quarter high as raw material costs fall. The management says they are sitting on an order book of over 4 lakh cars. Stock rallies 5%. Stock markets end a volatile session in the green. The Sensex and the Nifty post 1% gains for the week. 39 Nifty stocks ended the green as bulls continue to reclaim lost ground. New age companies that listed on Dalal Street are staring at a nervous November. Nykaa, Paytm, PB Fintech, Delivery and others will see shares worth 1 lakh crore rupees getting unlocked as pre-IPO lock-in is set to expire. Vladimir Putin says that he has no intention of using a nuclear weapon in Ukraine, says the war is part of Russia's wider struggle against Western domination, praises Prime Minister Modi's independent foreign policy, says both nations share special ties. The European Union strikes a deal with its 27 member countries to ban new cars with combustion engines by 2035. Cars currently account for 15% of all CO2 emissions in the EU. Well, this is the big story today. Elon Musk is now finally in charge of Twitter. The Tesla founder had until today to finalize the $44 billion acquisition or face a court battle. Twitter shares will be suspended on the New York Stock Exchange today and will be removed from the S&P 500 on Tuesday. The stock has gained 25% this year after Musk's proposed acquisition. Sources tell CNBC that Twitter CEO Parag Agrawal, the CFO Ned Segal, and policy chief Vijay Gadde have been fired with severance costs totaling up to $200 million. Parag Agrawal alone is likely to receive a $40 million payout. Musk is likely to take charge as interim CEO and is also planning to reverse lifetime bans, especially on former US President Donald Trump. So how is Elon Musk financing this mammoth acquisition? Arjun Karpal standing by with more. Arjun.
We have got confirmation this morning from Binance, the cryptocurrency exchange. They were one of the companies that initially said they would back the deal, but earlier this year, they've come out and said they will continue forward with their equity financing, and they confirmed to us that the deal was closed as well. We know the banks are still involved in this. This is, of course, a point of contention here because there are a number of banks, including Bank of America, who'd carried out this debt financing for this deal. But this was back earlier this year when market conditions weren't as rough as they are now. What's going to be interesting to see is after this is all said and done, will the banks be able to shift this debt to investors in an environment where investors are turning away from risky assets and risky debt as well? And that, I think, is one of the big questions here over the financing. We still don't know, but hopefully we'll get some more details as the day progresses.
Arjun, many thanks. But let's stay with global earnings now. Tech major Apple's fourth quarter earnings ahead of Wall Street expectations after posting a record revenue of over $90 billion, which was up 8% year on year. The company's earnings per share was recorded at nearly $1.3. However, the global iPhone revenue missed street estimates, coming in at $42 billion. The company's CEO Tim Cook says Apple continues to perform well in emerging markets with strong double-digit growth in India, Southeast Asia and Latin America. Shares of Amazon tanked in after-hours trading as investors were disappointed with the guidance for the fourth quarter. Amazon expects fourth quarter revenue between $140 billion and $148 billion. That's lower than analyst expectations of $155 billion. The company's revenue for Q3 in line with estimates at $127 billion. Meanwhile, tech giants continue to suffer massive losses on Wall Street. $800 billion in valuation. That is what has been wiped out in this week alone. The big tech stocks have seen a staggering erosion of $3 trillion in combined market cap over the last year. The tech rout on Wall Street has also caused the net worth of billionaires like Jeff Bezos, Mark Zuckerberg to fall sharply. The Amazon founder and the Meta co-founder and CEO have seen a combined loss of around $16 billion from their fortunes in just one day. Zuckerberg's fortune plunged by over $11 billion, according to the Bloomberg Billionaires Index, after Meta's disappointing earnings report. His total wealth loss amounts to over $100 billion in the last 13 months, more than any other billionaire this year. But back home, it's been good for auto major Maruti Suzuki, reporting a strong quarter this fiscal, with margins coming in at a 7-quarter high as the cost of raw materials has fallen. The company also reported a strong growth in volumes on the back of easing supply chain constraints. Sonia standing by to take us through the details. Sonia, good numbers there from Maruti.
Well, Maruti was a big gainer in trade today, up over 4% after reporting a very good set of numbers. In fact, the revenue growth was a solid 46% year-on-year, coming in at 29,931 crores, but that was largely in line with expectations. The big positive surprise came on the operational performance when the margins for Maruti hit a 7-quarter high of 9.25%. This compares to just 4.2% same time last year, and the management said that it is because of two reasons. One, that raw material costs as a percentage of sales have fallen 390 basis points year-on-year, and two, that they have taken certain cost reduction efforts which helped aid their margins this time. They also spoke about how the pending customer orders stand at over 4 lakh units, 4.12 lakh units to be precise, and that will aid their order book going forward. The stock is very close to its 52-week high.
Sonia, many thanks. That's Maruti for you, a stock car that was up by about 5%. And staying with the markets, the Lal Street closed in the green for the second straight week. Sensex and the Nifty ending a volatile session with decent gains. Both the indices have gained more than 1% in this truncated trading week. 39 Nifty stocks ended the week with gains. On to a CNBC-TV18 exclusive. The government could be finalizing the framework that will govern the issuance of green bonds by next week. India is looking to issue its first sovereign green bond, which could be used to finance a string of clean energy projects. The finance ministry has already anticipated borrowing 16,000 crore rupees via the green bond route in the second half of this fiscal. Sapna joins us now with more. Sapna, so perhaps we could see action on this front as early as next week?
Absolutely. In fact, the earlier deadline, or rather the deadline continues to be around 31st October, but we are now given to understand that probably by the coming week, the framework should be ready. There's already a CA-headed panel that is looking into this. There are, of course, other senior officials from Finance Ministry and Niti Aayog who are very much a part of this. We're given to understand that, as expected earlier, that this could only be for the infrastructure sector. Well, that may not be right. They might be looking at a larger financing through green bonds. So basically, it's not just going to be infrastructure. There could be other sectors like agriculture, social sector. Maybe the government is looking upon green bonds more for general financing rather than, only a few sectors. That's one. Second, the framework is also likely to carry only the basic principles of green financing. It's not going to talk about projects immediately, and obviously even in terms of the issuances and the tranches and all of that, that of course will be decided with the government in consultation with RBI at a later stage. Apart from this, the clear sense that we're getting from government is that, there's a clear class of investors who are very much interested in coming forward for green projects, investing in those like sovereign pension funds, stuff like that. And those are the ones that need to be channelized, and the government should take the lead on this front because they're trying to set the market for the years to come. They're starting off very small with 16,000 crores, around $2 billion worth of government borrowing through green bonds, at least for the current financial year in H2. We'll have to wait and watch and see how this really pans out. And the other point that the government is very clear about is that they would like the cost of funds to be lower. So it's not that maybe at the same GSEC rates, but somewhere the markup should not be too high. I think that's going to be a critical point in terms of these bonds becoming a success, and we have to wait and watch and see what kind of companies come forward.
All right, Sapna, many thanks for joining us. That's a CNBC-TV18 exclusive. Bollywood is clearly in a funk with back-to-back box office failures. The Hindi cinema industry, which was known for its path-breaking content, is struggling to captivate audiences. Vishishta Unwala joins us now with more on what the impact is likely to be of this box office debacle. Vishishta.
India is just past the Diwali celebrations across the country, but Bollywood still faces some distress. Undeniably, a poor content show is driving a lackluster box office collection for the Hindi movies, and to add to the weak content, a shift in preference towards consumption of a varied content on a plethora of OTT apps is contributing to the lower footfalls. This is evident in the occupancy levels, which are sinking, and of course, below the pre-COVID levels for PVR and INOX. though the regional movies are faring better than the Hindi cinema. The screen share for non-South markets for INOX is presently at 73% and 65% for PVR. Now let's have a look at how this year has fared for Bollywood. A total of 117 Hindi movies were released in 2022 till date, clocking box office collections of 2,900 crores. And going by the same run rate, by end of this year, we could be 40% short of the box office collections when compared with 2019, which is the pre-COVID year. Crucial to note here that the release dates of multiple movies were either delayed or pushed to OTT platforms. Also, it is undebatable that the film exhibition industry was the worst affected with the advent of COVID, as stringent government regulations made this industry the first to be shut when COVID began in India and the last to reopen when the travel restrictions eased in the country. A deep dive into this year's Bollywood movies collections tells us that without an impressive content, the presence of even big stars failed to attract the moviegoers at the theatres. Evident in the box office collections of big star-studded movies such as Lal Singh Chadda, Ek Villain, Liger, Raksha Bandhan, which largely disappointed the moviegoers. A total of 7 movies clocked over 100 crores of box office collections this year till date. This is to be compared with 19 films in the pre-COVID year 2019. Another factor that would determine the level of box office collections for a movie would be the window of its release between the theatre and an OTT platform. A shorter window usually garners a lower box office collection at the theatre. Big budget movies prefer a larger window as a theatrical experience brings a larger than life experience to the moviegoers, which is accustomed to the actors' stardom. Now the big question is, how will rest of this year perform? Upcoming releases include Avatar, Drishyam 2, Black Panther, while some regional movies in the lineups are Vathi, Kushi and more.
Vashishta, many thanks for joining us. Up next, a report by a Republican senator in the US supports the theory that the COVID-19 pandemic has its origins in a Wuhan lab. That and more when we return. Well, it promises to be a nervous November for new age companies that recently listed on the Lal Street. Nykaa, Paytm, PB Fintech, Delivery and others will see shares worth 1 lakh crore rupees being unlocked as pre-IPO lock-ins are set to expire. Nigel D'Souza is here with the details. Nigel, what should we be watching out for?
Well, as the name suggests, right, the header suggests that could potentially be 1 lakh crore of supply that could hit the market. And that's because the pre-IPO lock-in, well, it expires for various new age companies. 5 to be precise, they are the larger ones in there at some part of November itself. So let's get the list up for you on the screen. The dates where the lock-in expires, well, that comes up for you on the screen. The companies as well, and how have the stocks moved from their offer price. Now, you'll say that who will want to sell? Because anyways, these stocks have not given any big returns. These are pre-IPO investors. So for them, case in point being a Nykaa, well, the investors have got shares at around 200 rupees. The current market price is close to around 1,000 rupees. So there will be that sort of a temptation to go ahead and take some money off the table, either reallocate it or in fact, just book some profits. So that's the broad list out there. But let's run you through the quantum of shares that could be sold and in fact, the value of those shares as well. For Nykaa, we're breaking it up into 2 because the total quantum that's getting unlocked is around 31,000, 32,000 crores odd. But half of that is the promoter entity, which in all probability should not get sold. That's at least the way the street looks at it. So the overhang could be for around 16,000 crores odd. For Fino Payments, well, it's a smaller number, closer around 1,000 crores odd. However, the bottom 3, they don't have a recognized promoter entity. So the fear is that there could be big supply coming in from there, from Paytm, Delivery, as well as PB Fintech. So you put the numbers together, the promoter unlocked, the total quantum or the value of the shares will be around 16,000 crores odd, while the non-promoters could be close to around 85,000 crores. Put that together, that comes to a 1 lakh crore rupees odd. And just to recap, the last time this happened was for Zomato. Remember, you had a couple of large investors in there. They had come out, then post the unlock, they went and sold shares. The stock price corrected close to around 20% in a matter of a couple of days and went down to around 43 odd. However, investors, they lapped it up because this lock-in expiry coincided with their results. For Nykaa as well, a similar thing could play out because their results are in the first week of November, and that coincides with the lock-in expiry as well. So it'll be interesting to see whether or not investors come in there and lap up. They'll have to be a little daring to pick up some of these companies because of the kind of wealth erosion we have seen, and they'll have to be there for a longer time horizon. Finally, there could be two impacts that will play out. One is the share prices will continue to remain under pressure because of the big supply. The second factor is if some of those buyers who are waiting by for this dip, well, they're going to be spoiled for choice because there are going to be plenty of supply that's coming to market. It promised to be a very, very interesting November for some of these new age companies. In fact, we'll be chatting about this on our special edition every Friday on the Editors Roundtable at around 4:30 p.m. So you stay tuned for that as well.
Well, Nigel D'Souza there giving November rain a whole new meaning. Nigel, many thanks for joining us, and we look forward to seeing you, Sonia, Dimesh and Anuj on our Friday favorites, the Editors Roundtable. Now, a report published by a top Republican senator in the United States on the origins of COVID-19 supports the lab leak theory. The findings of the Senate Health Committee report are interim, and it bears the signature of only Senator Richard Burr of North Carolina. The report does not provide any verifiable evidence or classified information to support the lab leak claims. Ekta Batra joins us now with more. Ekta.
Thanks for that. Firstly, let me say this report signed by the US Senator Richard Burr is based on information which is already available in the public domain. The report suggests it is reasonable to conclude that COVID-19 pandemic was more likely than not the result of a research-related incident. The report cites examples of the pandemic being a research-related incident as the early signs showed rapid spread of the virus in Wuhan, with earliest calls for assistance, in fact, being located near the Wuhan Institute of Virology, or WIV, in central Wuhan. The report points out concerns on biosafety at the Wuhan lab, and it says there was evidence of biosafety failures which is already known. The report goes on to say that the hypothesis of a natural zoonotic origin no longer deserves benefit of doubt or presumption of accuracy, but points out that more information is needed to arrive at a more precise, if not definitive, understanding of the origin of COVID and how the pandemic began. On the same topic, it points out if the COVID-19 pandemic, the result of the zoonotic spillover of COVID in Wuhan from an intermediate host species, there should be evidence of the virus circulating in animals before it spilled over into humans. Instead, there is no evidence that any animal was infected with COVID prior to the first human cases. Let me reiterate, all this information is already in the public domain. Lastly, the report urges government leaders, public health officials and scientists involved in COVID-19 and working to prevent future pandemics must commit to greater transparency, engagement and responsibility. The report also points to critical outstanding questions to conclude the origins of COVID-19, such as what is the intermediate host species, where did it first infect humans, and lastly, how did it acquire its unique genetic features.
Ekta, many thanks for joining us and explaining to us what that report says and, more importantly, what this means. Appreciate you joining us. At over 25 crores, India has the largest adolescent population in the world. Statistically, every fifth person in the country is between the age of 10 and 19, but most of them have never had a formal sex education class, and this has experts worried about holistic development. In this edition of our ongoing series, Get Schooled, Kiran Khatri speaks to schools that offer this subject as part of their curriculum to find out how they're faring.
30-year-old Kabir Man is an educational facilitator. He was 25 when he attended his first sex education class in a formal setting. He says it changed his life.
I identify myself as a trans person. I'm a trans man. अभी तक मुझे पता तो था, लेकिन I didn't have that time certain vocabulary. पर उस sex education से, gender sensitization से, I got my life on track.
Today, Kabir works with an NGO to spread awareness about sexual abuse and sex education to children in government and private schools, and says the content needs to go beyond just a basic lecture on human anatomy or morality.
The first or utmost tool is be open. Be transparent. Don't hide anything. हम अपने सेक्सुअल ऑर्गन को जब मोरालिटी से जोड़ देंगे तब प्रॉब्लम हो जाएगी.
Organizations like Parvarish have succeeded in getting a few schools in the country to include sex education in their curriculum, but success is sporadic. I'm here at a Mumbai school that teaches children with learning disabilities. Sex education is an important part of their mental health module. The school believes that it is important for these children to learn this subject because they're at a greater risk of sexual abuse.
Now I want you to think.
Teachers at the school are trained and sensitized with the right vocabulary and terminology associated with the subject. The program has molded the school into a refuge for a 14-year-old child who's struggling with their gender identity.
It's a beautiful journey because she's completely accepted now within our school, extremely confident. It's beautiful to see kids completely accepting and acknowledging these aspects without any bullying, without any negative comments, or without putting any child down.
At Chennai's Sriniketan school, sex education is mandatory for students. The school felt it had to offer more than the CBSE recommended adolescent education program given rising instances and reports on child abuse across the country.
We start very early. We start with kindergarten, we start with good touch, bad touch classes. We have puppet shows for children at that age group for them to comprehend what we try to say. And it goes right up to grade 12. We have age appropriate content for each of the grades. And we have our school counselor, in-house counselor, who goes around executing these classes.
A Montessori school in Hyderabad has added a robust curriculum on sex education this year. But the parents took some convincing, and it had to be careful to ensure the subjects covered were age appropriate.
There were some families that asked us, is it too early? Will it put ideas into my child's head? And then we actually explained to them like how it is done. Not every child gets everything. Our curriculum starts from bodily anatomy, goes all the way up to transgender, gender identity, gender fluidity, and rape and abuse and all of that. Obviously, we're not going to cover all of that for younger children.
Students at both schools have responded well to the classes.
If we face any troubles, we can approach them freely, and we have this comfort in mind that they won't judge us and they won't, push us aside saying that this is not for you.
I was quite comfortable with body talk, except for one part, which was when they were telling the female organs, because it felt a bit weird. In the next body talk session, I felt a little better.
The problem is that schools with such a curriculum are a minority, and there have been instances of pushback from both parents and communities. But many educators believe this is a crucial step as it teaches children critical life skills like body confidence and gender equity, and creates awareness around the prevention of violence, communication, consent, and respect. In Mumbai, Kiran Khatri.
And with that, it is time for us to wrap up this edition of Business 360. Thanks very much for watching. Stay tuned. The news continues here on CNBC-TV18.